Okay, my friends, this is the ThetaWaveTrader. Trader. Darren Hancock, Breakfast Club, now the afternoon lunch munch. Is that what we'll call this? The afternoon lunch munch. Looking for some... We have a new rate on liquidity, consolidation, run back up into 50% or 62% of that range, right back to a logical level. Look at that, 50%, bingo. Right back into a breaker, that little breaker right there. Run back up above these highs, didn't quite, yeah, it did clear out that one as well. Ran to that and then quickly zipped away. So now we've broken through the consolidation, ran up, ran the lows, but we still have not quite filled in that daily objective. So we're still waiting on that daily objective to get filled. Let me make sure that I'm actually live streaming with you guys here. There we are, and there's Kirk, Lunchables. There's my buddy Kirk. It's like when you were kids and you're on the bus and your friend is at the next bus stop and you're expecting him as soon as we come by to see your buddy standing there. That's my buddy Kirk. I expect to see him standing there at the bus stop. Picking up Kirk. Okay, Kirk. Let's get busy. Just you and me, my friend. All right, so we're still looking for down here. I have to try in all these consolidations and these breakers and so on and so forth. So let me just get a feel for this. We've been gone for an hour here. Look at that big fat order block there. It's not even valid yet. Not even valid from the top, and we have nothing on the bottom. So we're not valid on anything here yet. We're just marking time right now. So did we just sweep the highs, sweep the lows, take out everything here? I want to see this happen here. Then a break in structure to the upside, get our fair value gap, get a little clean, and then eat healthy. Now we're validating these order blocks here. But are we doing it with a wick or a body? Have you ever watched NVDA? It currently supports the NQ narrative. I don't know what NVDA is. Support here, continue up. %62 right there. Right off 62% there. 70 off from trade entry. So We want to see some sort of break in market structure to the upside now. Want to see this fair value gap. Does it support price or do we give way? I'm not worried about this anymore. Are we trying to squeeze the last bit of juice out of this orange here today? I want to see a significant break in market structure to the upside now. If we get a fill here, stop loss will just go up here. Again, it's one of those, do we have a body that closes above it, right? If we get a body close above it, I'll shut it out right away. I want to see a quick reaction off of that. Turn that into a bear candle now. Would be nice. This repeated tapping on it, I don't like to see that, but we do have this breaker sitting right here. So I'd expect to see some sort of support off this breaker at the very least. Tap it and get off of it. There's the breaker. 3 seconds, pull back. Body traded above. If I can get back into there and get my trade off, then I'll take it off. Otherwise, it'll take my stop. Rejection block. You don't want to see it trade above the mean threshold. Big reaction off of that now. Come on down in there. I'm going to move my stop loss to here. I don't want to see it repeat this old high here now. This inversion here now, you want to see that whole price. Still haven't traded below it here now. It can still come back and take me out. So we traded through the breaker multiple times. I'm just hoping these probes here create some resistance. Guess not. What time is that? 14, 16. See, I had an opportunity to get out, traded above, had an opportunity to get my trade off here. So this takes me out. I didn't follow my rule for getting out. See that? I could have got out even with some profit there because it traded above me. Didn't follow my rule and consequently lost that trade. So that indicates that we've got further upside now, finding support off of here. What is going on over there? Jeepers, shut up over there. Okay, so I want to see a big break in structure to the upside here now. That would have been the, I didn't see that. That would have been the lunchtime silver bullet after lunch for a long. I'm going to go long there. Oh, speaking at 1:30. Okay. I'll wait for a better setup. It's in a premium level here. No need to rush a trade, even though that looked like a nice little silver bullet entry there at 110. It's one main component of the NASDAQ. Currently, Fed is speaking in minutes. Chat disconnected. Please wait while we try to reconnect you. Oh, the chat was disconnected there momentarily. Order block valid, come back to it, find support. You're in between these two right now. This one looks like it wants to give up anyway. Swing low. Get a body below that. We don't need a wick there. I want to see a body get low here now. 21. This is a potential swing point right here on this candle. Let's take some sticks here, move some sticks around. Notice how this big order block here now, we're trading back into this larger inversion. You want to get a discount inside this range. Being up here, not a smart place to buy. So wait, there's 50 mean threshold, consequent encroachment of the SIBI. This makes a swing. 22, 23. So we'll wait for the bottom of the hour. Look right here. See if body get below that. We're going to short that. This might actually take out the lows now. But I like that little imbalance down there, so I'll just take that for a quick profit. Okay, that's done. So next thing is use the mean threshold of that candle. Now, depending on the kind of snapback we get off of this candle here, this could be a nice deep retracement into the next run higher now. %62 here. See how these imbalances provide a level of support or resistance or draw on liquidity to a logical level below 50%. If you were just dipping into a discount array, where would you be looking for? Well, there's a nice little place there. That's why I had my stop loss sitting, or my take profit right there, which is just into the discount array. Now, mean threshold will put you somewhere around in here, 70%. But if it takes off from here, you see that's a really nice entry right there to there. I don't know how many handles that was, 70 to 53. So 20 handles. Now I'm going to share with you another entry. For the 8 of you who actually stuck around for the afternoon session to watch this, I'm going to show you the another entry point. So when you get a high taken out here, look for a fair value gap that occurs on or near the high, and if we trade below that, it becomes the inversion point to get short on, and then aim for the discount array. So that's what I had there. That's all that was. Swept the highs, look for an inversion to get broken on the downside, come back into the inversion, and then get short. That's another entry. Now imagine if that was on a daily. You saw that happen on the daily. You got it on a couple of 1, 2, 3 days of down to an objective on the daily chart down here. And this does not change on a minute candle, monthly, weekly, daily, hour, 4 hour, 3 minute, whatever. It doesn't matter. It does not matter at all. That was monthly even. Think about the months. You got 3 months of straight down from there to there. Now, the question is, do you trust your PD arrays? And are you going to put your stop loss way up here 3 months ago, right? Because you would allow for the possibility of that running all the way to the top of that inversion. And if it runs through it, takes out your stop loss or puts a body above it, and then you got to try and wait another month for it to come back in there, you might want a more solid entry, that's for sure. There's your mean threshold. Oh, that candle's an order block. Holding price. Back to an order block here. Continuation on the downside. Again, keep your eye on the mean threshold here of this down close candle. It's the breaker that initiates this big run to take out these highs. I guess you could look at this as the swing, and that's the breaker. Right there, that last down close candle and the swing below that little high there, and that initiates that run all the way up to take out those highs there. So kind of reaction you get off that little tiny fair value gap sitting right here now. You want to see this candle get lot taken, and you want to see the mean threshold of that big candle. I like the big one because these guys are inside this one. So I would like to just use that one as the overall breaker candle for that run up. So mean threshold puts us right in around. Let's not do around, let's do absolutes. That's your line in the sand if you want to go long. Order block. Find some support off of this. Keep coming back down. You see how it's stepping? You have order block. Trade back to it. Right here. Trade back to it. Trade back to it. Order block. Down. Drop below it there. Trade back to it. Order block. Drop below it, trade back inside it, order block, trade below it, come back inside it, continue on the downside. If this is holding now, see how the bodies are respecting the fair value gap, wicks do the damage, with this has now become an order block. So if this, we're between these two right now, and if this one gives up the ghost like that, and we have a body trade above it, this could be a potential swing point. Inversion right here. Inversion. There's lots of things to draw out here. I don't want to get lazy in the afternoon, so let me pop these in here for you. Look at that little imbalance right there. No bodies breaking the upside trend. So yeah, we've got wicks that have got above this little high here, or this order block, but I'm not convinced that that's a run on bullishness yet. Even though we're in the discount portion here, I'm not bullish until we get above, start breaking market structure to the upside here. Look at that, keep your eye on that little piece right there for a downside discount array. This could be the crazy Ivan, and then a continuation down. This is good. I like to see more bodies closing up, creating another candle to find support off of inside an inversion. Again, no big body above a swing point yet. I want to see it blow right through here. Inside that range, pull your fib tool. 62% up here. Does it line up with anything that we this breaker here? See how it come back to the body there. React, look down here. Order block, mean threshold. Does this provide support, or do we cut all the way back down into this array here? This is a breaker. No. So we want to, if it does come down here, you want to see a wick down, pull back. You don't want to see a body close below here. This candle. And ideally, I'd like to see a wick down to here, pull back, and have a body close above here. Give me the next candle. So they're respecting that candle there. Back to the body. Of the open. We're stuck in here right now. You got to get a discount to go higher. Right there. Good. Off this order block. Snap off of it now. And close above that. Just close above, right there. Nope. That's going down now. See, it slightly closed below it, opened, and came down. I want it to be here, didn't. Drop there, nope, it's going down. Came right off of our imbalance right here. Mean threshold now. Right there. If we lose the mean threshold on a close, we've gone from premium to discount all the way back down. So you're really between these two candles now. this mean threshold and that one. So bring this guy down to here. That's the range we're in right now, so it has to decide to move beyond here. These were the lines in the sand, so the moment we close below that one there, this becomes the line in the sand for down, and this one becomes the line in the sand for up. So now the algorithm's gonna look for data points further back and extend its range, either down to rejections. It could keep bouncing off these levels, or rejection, rejection, or higher, and start running, because right now this little compression that's starting to happen, the algo's got to look for an extension here somewhere, so it's back to that top of that inversion again. And obviously there's somebody chatting away right now, the FOMC guy. One there, and this mean threshold here. See how it came up to that mean threshold there, pull back down, try to make its mind up. Now it's good. I got to get out of here. I've run that and that. I've got to start extending either to rejection block, or start building my blocks up higher. Like that's, you can't ask for more precision than those two lines I put there. And it comes down inside them, taps one, comes back up, taps the other, comes back down, and then makes a decision. Extension into rejection block. Now either this is going to run all the way back down into here, into this range again. Now we validated this order block, so we have to bring him into play. We've traded above the breaker, sorry, above the mean threshold of that candle. So let me move my sticks again. So we've got midpoint of that wick. Now we've hit the rejection block here. Like arrays, if we go through here, a like array would be down here, or inside this range, like array from here to here. And that wick's already been chewed through several times, so my guess is if they do come down, we're looking for down here. Good, they're extending some higher. I like it. This becomes this valid order block now. We're extending up higher, provided this one closes above the 50%. Otherwise we're just bouncing off the 1 minute again. Start pushing. So we just came back to the 1 minute order block here. Does it provide support? Which you see it snap off there really quick like that. It's a good sign. Run for these highs, start pushing higher now. We want to see these starting to climb out of these order blocks. So you want to start seeing support at these inversions now, if we're going to start climbing higher. Now we're validating this order block so we can get back into consolidation again now. Even though it's a wick, we'll see where it closes. If it closes below, look for it down here again. Two, one, close right on it. Okay, so it's still below on a wick. So I'll look for the mean threshold there. And we're looking for, we're still inside this rejection block here, this wick. Haven't taken the high out yet. We could still come down into this. You want to see this candle give way now. Remember we said this one down here at support from wick to wick now. This was the downside candle. Discount, premium. If you don't believe me, let's make it a little more sexy and pull there to there. There's 50% right there. 62, right on the money, right here. Whap right into it. Now you want to see it snap off of it and head up higher, unless we start to drive down lower. So this order block now has to give way because we're between these two right now. And this inversion. Chop, chop, chop. You don't want to be in the middle of all this stuff. Even though it's kind of making good. Okay, so it's eating through here. Back to the order block. More downside now. Still looking for that rejection on the block on the opposite end. Remember we talk about like arrays, one to the other. Order block, mean threshold, new candle starts, mean threshold, comes back down to inversion, then it has to extend up into rejection block, come back down to 2-minute order block, still inside rejection block, doesn't take the highs. Now we're looking to extend back down to order block again, which is now I guess a breaker because we've run up above this little swing point here. So we're back to order block, here to here. So this could be a slow, insidious grind from one array to the next array. We'll see how that pans out now. Again, keep your eye on that guy there. See, you want to get outside this big fair value gap we're inside here. It's now an inversion because we already ran through it. We've run back into it, and now we're banging around inside it. This big sucker right here. So mean threshold. So now we're between this candle and this candle because we've now validated above. So you come back from here to here. See how it reacted off the mean threshold? Now if it drives through it, that's fine. Look for the rejection block again. If we lose that mean threshold, then this starts to become more support. And that order block is what we're looking for to maintain these little attempts to get down. Right there, inside this inversion would be nice. You don't want to see us close below this inversion now if you want to stay positive. Not that you would, because nobody want to be in the middle of this lot. See how we're losing it now? That order block holds. Look for this guy to reach down into here now and here. premium array, discount array. Validated this order block. So those of you who are just kind of new to this or watching for the first time, trying to make sense of these candles, they do make sense, and yes, they do switch up, and yes, it does sound like I'm changing my mind because we're in a consolidation. So one minute you're going long, next minute you're going short. That's the problem with consolidations. You wait for a breakout, so your narrative is constantly changing from long to short, because you're in a consolidation. Now, whether or not you can stay on the horse and you catch the full ride, and the bucking bronco is trying to shake you off here, if you can stay on this and read these arrays from one array to the next array, back and forth, you're on the horse and you're on for more than 7 seconds, you're going to be a winner. You're going to be a winner because you understand price action. You're understanding which arrays they're reaching for. If it shakes you off and you go, okay, I'm wrong now, what's happened? Get back on the horse. Look to get back on the algorithm again and start the ride and catch the ride again, and just keep practicing until you can stay on that horse for more than a minute, 2 minutes, 5 minutes, or it just can't shake you off. That's ideally where we all want to get to. So right now we're seeing how go out a rodeo you can ride. So we're still looking for this down here. See how this order block was validated? We came down below it, came back up, bang, right on the body, and it's also inside that inversion, right on the inversion. So far it supports my idea to continue down until we change directions and we start to claim jump above this candle here. I'm still bearish now until I blow through the midpoint of this and start running this candle out. Then you change it to bullish, then you change it to bearish, right? Because that's what the algo is, bouncing around inside all these things. So you got to kind of just stay on the money, right? And it's just, look at how many times it re-reaches into this imbalance here. Multiple times it wicks through it, on it. So right now these arrays are holding here and here. We're bouncing between them. Here's your premium, here's your discount, here's your equilibrium array. So that's kind of like the range you're stuck in right now. So again, still looking down here. Come on. Make me look like a wizard. Oh, there you go. So there's the mean point, the mean threshold. Now I want to see that pop through here and just come into my rejection block. Because we're in rejection, which is that big wick right there, all the way down to rejection here. Like arrays, one array to the next array, and there you go. There's your discount. Wizard Harry. See? Bingo. Now start running for the low. Take the lows. That's why we're bearish. And we stayed on the horse inside here. Stayed on the horse. Even though it tried to shake us off here, we're calling for a like array to a like array. Tried to shake us off. Kept showing us support on the downside. Finally reached our array. Should we do that again? Should we rinse and repeat? Play again? Load me up another horse. Let's do this again. Isn't reading price action fun? So we swept the lows. So we have this candle and we have this candle. Look at this little deliciousness above us here. So that's the idea where we want to head for. So we want to start going all the way back up here. This most recent high. Well, it would be this guy here, but so we've got to try and find something that gives us some support for this going back up again. Otherwise, we're still going short. I like this up here. We've just ran the lows out. So if we're playing consolidation buggery here, bugger it back and forth. So we're going back for reaching for the liquidity above the market now. My horse is a bull. My butt hurts. Yeah, don't throw money at this yet. Just enjoy the practice of playing in the price action. Like, watch it, study it. If you put trades on this, you start to worry about the trade and not practicing your price action. This is the shit you should be practicing in, not trading in. All it will do is just give you a dopamine hit, and you're really not studying the price action the way you want it to. So study it stress-free, without your money being attached to it, or even demo money. Even demo money can be a bit stressful. So we still don't have an upside. For confirmation that that's where we want to go, I haven't got confirmation that that's what's happening yet. So until we see, maybe come back, get some support off of this, and I get a reaction, maybe. But right now, that big down candle right here, I need to see it break above that to reach for that. So I want to see a little small down close candle, get some support. Otherwise, we are still bearish. Still bearish. Until something proves us wrong. See, we've already blown through that inversion. Sorry, that price imbalance. So we're still bearish. Now this candle supports a bearishness. We validated it here. Imbalance here. So we trade back up into that imbalance. So forget those guys for now. No swing point here, but anyway, this is now our candle of flavor. Imbalance, imbalance, overlapping, rejection. Watch the mean threshold here now. We want to make sure that if we're bearish still, we want to make sure that that mean threshold holds price on a close. We can wick up, touch this one more time, come back down. I'm all right with any of that in there. Thanks, TK. Boom! Do you see that? That was a lightning strike right there. Hello. Oh, look at that. That was a lightning strike. 2 o'clock. It's the new 2 o'clock rush. So if we see a nice big 2 o'clock rush to here, come on down. That might be the place to catch your 2 o'clock. Oh, I'm so tempted to throw it, but I'm not chasing price. See, we're still downward. Touched off there, exactly where we were calling for it to potentially touch off of, and then lightning strike straight down. Hello. So now we're looking for this guy here to get on down here. Come back up, find support. What is this, 12 o'clock? That was right on 2 o'clock. Holy smokes. That was a lightning strike. So create a fair value gap in here. See what happens in the next 18 seconds. Create a fair value gap, trade back into it, either there or even back to this old low here, And then we're looking for more lightning. We're getting closer and closer to that. So trying to chase this last and juice every drop out of this orange for the day is potentially dangerous, because if you don't get it, yeah, I know, I get all my little alarms going off now, telling me where things are going and what they're doing. Now, do we call this the low? Do you take a chance and take a low for the day and say that's where I want to go, and I'm going to pick the low of the day and have a really tight stop loss? Or do you wait, you hit that and wait for your first opportunity on a 30-second chart to go long? That meets your daily objective for a full close of your price imbalance. And the fair value gap on the daily, like look over here. Where's our volume imbalance? That's a price rebalance right back into here. So we're looking for that to close off right there. And if it dips down, we could also dip into here. So I'm keeping my eye on, oh no, that's right there. See how we're reacting off of that now. Ooh. Look at that. So you may not get all the juice, you're just left with the peel. This is all good. Now we have, if this ends up closing up here now, I'm loving that. Consolidation, leg that takes out the consolidation, right back to an area of liquidity we're looking for a close for the day. Give me a big bold candle above, create a fair value gap. Let's get busy. We have a big ass breaker down here now. There you go. Give me some candle. Don't get impulsive. Don't chase this. Don't chase this. So far, no bodies above the highs. We have these illusions that we're having a big run up. But this will be an opportunity for everybody who's going short. Slam down, they get excited, then a whammo comes back up, cleans them out, then finishes off our objective for the day. Not that that's what's going to happen, but if I was mean and I was in charge of it, that's what I would do. Run it up, clean everybody out that's trailing their stop losses right now, who think they're just running for this low. And then one more time, because how many times have we tried to get down there and it comes back and it takes out those trailers? Look at how many times you tried to dig down there today, and we run back and we're going to run down, smash them out, run down, smash them out, run down again, smash them, consolidate. Now we got a bear flag going here. All these people think this is a bear flag, retailers, they're going short, slammo, it takes them out. Right back into an area of liquidity, 50% of that consolidation. Then it slams them out. So all these guys who wanted to go long here or short here got taken out. Those who wanted to go long there, they got taken out. Then just to put the boots to them again, this is shaking everybody off. Consolidation, ran them down. Those guys who were going long on this here now, ran them out. Now ran all the guys short who are aiming for this objective here. Like, they're not giving you this objective. This may be so obvious to everybody that it just keeps coming down, giving you a hint that it's going to go there and slams back and takes you all out. Slams back and takes you all out, right? This might be the one more run down into here, and then the slow, steady petering here. Leave it down here like a fish out of the water. then nobody wants to be in it anymore. It's near the end of the day and they wait for tomorrow, and then it slowly creeps up through Asia. How's that? How's that for my prediction? We'll see. What's the psychology? How do you shake people off in here? This was a beautiful bull run. We stayed on the bull and got the 7-second win right there. When that lightning strike, that was bang, right to your objective low. And you were aiming for here. But if all you got was that, you did all right. So areas of support, resistance again now. Fair value gap, dipped in, all the way back to this swing point here. Old high. You're getting a reaction off that to drive higher now. It is delicious. All right, so not participating in that. 50% puts us right here, right back to this little imbalance again. Forming the bear flag now. So all those people who love this bear flag here and this bull flag here, these people who are into the bears, that's why bear flags fail. You can't rely on them. Now, lots of people can give you examples of them working and working quite well. But if you look at that and you say that's my pattern, because you look at a cluster of candles instead of seeing where the algorithm's running to. If you would have seen that your algorithm, your bear flag was starting to fail when you ran the lows out here, and you came back up above this inversion right here. Body trades up above it, you start coming back into it here. That's where you start getting nervous whether or not your bear flag's actually holding price. And as soon as that body takes out that high, those highs there, now you really start to panic. You say, I don't think so. I don't think my bear flag's going to make it. All this resistance you get excited about, you take out a high, come back to that or that fair value gap, hit it, and go. Now, how fun would that have been if I'd stayed in that one? Weathered all of this for this. It's a couple of days in a row now I didn't stick around in something. I just wanted my quick profits there. Nothing wrong with that. Consolidation. Look at looky, watch this. Looky. If you take this as the consolidation, we didn't quite get back to 50% of it. If you take this as the consolidation, you didn't get back to 50%. If you take the bodies, you still don't get back to 50%. It was sitting right here. So you got, this is one of those limbo ones, right? You either come back. See, we want to see a body break the high, though. This is the problem. I like seeing bodies break the highs, not these wicks. Even though they're beautiful, big long wicks, They're not like super, I'm going bullishly long. When you just see wicks getting up there, that's like a stop run. It's not supporting a big run up bullishly. So I'm still not bullish yet. Even though you got this big monster candle here, I'm not bullish until you see a nice body get above this thing here. So now I want to see a body get above this high and that high before you start getting excited about getting long. Otherwise, we have an order block here. It's now been validated on the downside. We've come back into the body of it and we've reacted off of it. See that? So forget this for now. The 50% might be, what do we said that was down here of that range. 50% sitting in here. So we'll see if that ends up giving us, or did I do that wrong? Sorry. Stand by. Let's get rid of this one. Oh, yeah, there you go. 50% of the range. Right there. Wick, wick, wick. You hit it, and we leave. So there's one, there's two. Now the leg that takes out the low, if this does not give way, if we don't start taking off soon, out of the 50%, so there's the three different entries I was telling you about. But again, I want to see a body get above this, not a wick. So this doesn't hold a lot of faith for me because I want a body up there. If this was a body, for example, and we came back to the first entry, which would be right here, second entry would be right here, which is ideally what's been happening here, and the third entry would be this leg that takes out the lows and takes this low out here. That leg right there, 50% of that leg, I want to see if it comes down and just wicks into it, which would be the top of that order block here, and then I think that's about where 50% of that would be. Let's see. Keep your eyes here and here. 50%, so we're looking for around there. So not bullish yet. Not a bullish yet, my friends, not bullish yet. Order block validated, return to, order block, body, open here, trade back to, mean threshold, back down, come back up to the body, wick again, starting to push down through here now. Now we can start pulling this guy out of here because I think he's been worked pretty hard. Let's take this guy out of here. Let's go from there all the way down to here. Now premium discount. Take the fib tool. Look at this. Look at this. Look at this. This is why we're not bullish. You see that? Did you see that? I love this stuff. Look at that, right to the first line I had right here, which is fine. That's in a discount range. I'm all right with that. But I do like the 50% here. If we get a return to here and it closes above that, again, I like to see a body get above here. So this is still not a valid for my entries, but I'm just trying to give you an example of 3 different entries. We've talked about them earlier in the AM session, the places to get. 3 different entry points. That would have been one, and you would have just, you'd be up, you'd be in positive, and then all of a sudden it would come back down and you'd be like, oh, I'm in negative. So low leverage, medium leverage, higher leverage, closest to your stop loss. Again, calculate what 1% of your account would be. If you're going to trade all 3 of those, you'd say, what would be 1/3 of 1% of my account here with a 1% stop loss, or 1/3 of a percent stop loss here? What would my 1/3% stop loss there and 1/3% of stop loss from there to there? What would they be? Or maybe you want to put a quarter, and a half here. Stop loss here. Because if you lose this on a close, then it's wrong. Then we've got more downside to go for. At least that's my little way of looking at it. So right off that, where we had the line the first time, back up into this range here, premium, nothing in the discount. They have validated that order block right there. A little tiny wick got above it. Not the kind of support I'm looking for, but nonetheless, we want to see this candle somewhere in here hold price in the main threshold. We'll see where it closes. You want to see that continue up. Look for this order block here now. And we're coming right up inside that fair value gap again for the top. See how body's been eaten through here right away. Precision, love it. You want to see this give way now. Come back to the order block. So we now have mitigation. Bodies of the candles respecting this dude right at the rejection block. Got into the wick. Back to this order block. Now it's just really been validated now with the body that got above it. So we're really kind of big candles. You're stuck in the middle here now. We're still inside this fair value gap here. So to me, you still want to, because we didn't get a body above that, this was the key right here that unlocked the potential for this to run back into here. This turned into a wick, so it was a stop run, not a, hey, I'm the elephant putting their toes in the water. I'm not done coming down here, he says, because this still may be the objective for the day. Just enough to keep shaking people off all morning. Love it. And they're not shaking us off yet. We're still on the bull here. Not convinced that was long. Back to the order block. All right, now we've got a new order block right here. Still inside the fair value gap. Come on down now. We want to see this one. Again, this is not to me, this is not a valid run for highs, though it could be. I want the bodies up here to validate this. I'm just giving you 3 different perspectives to look for to see if you get resistance off them. So this guy here, you don't want to lose the mean threshold. There's a little imbalance up there. That's fine. It can come back up there. There, boom. See how it hit it? Why did it hit there like bang on the money like that? That was some random spot in there, was it not? Darren, what the hell did you do there? Why was it so damn random? We know why now. Is that an error? Is that a data point? Hell yeah. Banged off it. So yeah, it came up. If it drives through it again, I don't care. But look at the sensitivity off of a little bunch of candles we found right in the middle of down here somewhere. Like, what the hell? How did you know that line was going to tap on it like that? Are you guys smirking right now? Now, does this hold? At a time, I expect a 21 candle turn. Now, if this drives all the way through here, that's fine. But I just love seeing that reaction off of there. Now, if that just makes us a turn point here now, we go back up. We're just playing with price action. That's all we're doing. We're not trading any of this stuff. Because think about what's going to happen when we start getting these candles start to smooth out and price action starts to equal out, start to behave itself, so to speak. and we start getting into nice open range runs now. If we're seeing the detail down at this level, just imagine what we can do when the markets start to open up again. And we start to get ranges, getting these big long ranges like March, April, into May. Ooh, y'all better be here. April into May. Tune in, bring your friends, pack a lunch. When March has finished its low, look at that. Did we not say that this is an area that was going to run to? Do you not see precision here, people? Look at that. Premium discount. Is that a premium inside that range? Let's do it. Let's do it. Let's drop our little fib tool right here. Little Mr. Fib tool. Look at that. 50%. Hello. Come back to a premium. Just pop up into premium. Oh, what's sitting right there in the premium section of this little tiny range? Oh, it's like a little price imbalance. Well, let's get a little bit of action there. Turn around. I don't care if it heads all the way down here now. It makes sense. Pop, 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 drive down. Lovely. Lovely, lovely. We ain't done down here. Still on the horse. The horse is getting tired now. They're trying to shake us off. It's running around the ring. We're swinging our hats in the air. Woo-hoo! Yeehaw! Look at that. Come on down. Come on down. Come on, give us a little touch. Come on. Don't leave me hanging now. Give me a high five here. Kirk, they didn't shake us off, man. We run the bull snot out of this thing. We called the ride all the way down. All the way up and all the way down. Look at that bouncing bull. Get off me, get off me. Yeehaw, hell no. What does ICT call this? You said it. Big bold letters, baby. Boom! Big bold letters. Alrighty. Didn't shake us off. This didn't fool anyone. This big run all the way back up. Hey, I'm leaving. I'm leaving. No, I'm not. No, you're not. You're not leaving. Oh, look at that. It ain't done going down. I want this sucker to rip all the way down into February, deep into March. You just come and give me some big retracement now. Oh, it smelled carrot. Who put that carrot down there? Who put the carrot there? Just when we thought we'd forgotten the carrot, the algo smelt the carrot. Okay, enough mucking about. Where's the next level of, where's our next level of, daily candle now. Look at your daily candle. Put the tip of the carrot right there. Come down and kiss the carrot. Have a bit of a nibble. Then we're inside this guy again. You see that? See that daily one right there? That fair value gap again. Because ideally we want to see this give way. Let's put the 50% was right on that money right there. We want to see this. trade to this, come back up, hit that, roll over, and continue down. So if we get tomorrow, if this closes down here today, tomorrow we trade back up into this and continue driving for this right here. Inside this daily favorite, I want to see this puppy come ripping down here. Oh, it'd be nice to get right down into here, into February. Give me back the weekly fair value gap again. Come all the way back to that. And then run for here in May. Run higher. I've got all my money sidelined right now, waiting for all the ETFs to take a dive. There's tons of liquidity in ETFs down low. So wait until February, March. Catch the lows, seasonal tendency, plus whatever it is that we see on here. All right. So we've now run through this. Do we find support at this and continue down? Now, how many of you are looking at this and saying, oh, I should have traded that. I should have traded that. No, you shouldn't have traded that. You're studying price action in a market that was banging around. Thanks, love. That was banging around, trying to shake off people. But we caught the horse, we caught the bull and rode the bull. They weren't shaking us off, man. I think that might be it for me, ladies and gents. I hope you enjoyed the afternoon show. That was a bit of fun. Hopefully you get to see more precisely price action and understand price action a little bit cleaner, even in despite of all this kind of messy stuff we had today. I think we called a good run in the afternoon there. So I hope you like it. If you're new, stick around. We do this every day. We try to look at price action. You'll see me not always taking bang on trades, but I'll give you candle by candle blow where we think it's going to go, and I'll give you my reasons, and if I'm wrong, I have no problem admitting I'm wrong and then start going back in the opposite direction. We can do this. We'll be doing this every day, year after year after year, my friends, until I get too old and senile. And I still got another few more years before that kicks in yet. So order block. See, keep your eye on that guy now. Start drawing your inversions, because now is a great opportunity for the market to turn around. Find some support. That would be the low. How do you find that low? Well, you want to see a fair value gap, get above it, come back, find some support at it, and start to now eat through all, take your fair value gaps, put them all up in here, mark them out, look for the range, 50%. If you're doing a quick snipe to try and grab yourself a couple of pips here and there, do it really quick and nimble. Really light on your, we're near the end of the day now. So there's a little pop back into the inversion, like there. Now you want to see that start going back up again. I'm like Lauriston. I tell you I'm going to leave, but I don't really leave. Anyway, Look for that support. If it doesn't support, it continues going down, I'm all right with that. We're looking for a downside run for the rest of February into March. Ideally, I'd like to see that. Then we have a higher time frame run up into later on. So don't forget, my overall objective is to go lower for a while now, and watch your counter trend trading. Watch for key levels like breakers to provide support if we're rolling over and creating a new price leg down. So that you'd see this from here to here, come back into somewhere around here, and then start driving back down again. So you'd see something like this up around here. You could even see a close on that and run down some more. Like that. And if you break through this and you start finding supports at them, then look for the liquidity run above the markets. There's a lot of freaking liquidity sitting up there. A lot of people were looking for that low today. They kept their stop losses up nice and high, didn't get taken out, and they've been patient enough to sit there and wait for this. A lot of people moving to the sidelines now. This could go flat for a little while for the rest of the day. A lot of money unloaded at that point. If they didn't catch them, a lot went on the sidelines there. I'm assuming. I'm pretending. What do I know? There was maybe not even a nickel went on the sidelines. Who knows? Anyway, that's it for me. I'm out of here. Love you guys. Thanks for popping in. That was a lot of fun in the afternoon session. Trying to ride the bull. Staying on the bull. I think we got the full 7 seconds there. I think we run the... we're king of the stampede right there, let me tell you. Love you guys. Stay safe. Take care of each other out there. Love each other. Walk away from the charts now. Go have a little beer. Cuddle your girl, your guy, whoever. Cuddle the people you love. Support each other. Take care of each other out there. I love you guys. Thanks again for tuning in. Thanks again for those who have joined our stream. 187. I am honored to have you pop in and spend your time with me. So thanks again, and I will see you guys on the Thursday reversal. Take care.